Next one, Ethereum. And again, you know, it's one thing to have a trade plan, it's another thing to execute. Trading's challenging because you can know all this theory and still not know dick about execution. Execution's like a whole nother thing. Sometimes even bad theory and good execution makes you a good trader. But good theory and bad execution, you still can't win. So I'm not going to get into, you know, the details of execution. That's just another video entirely. If you're interested in that, leave me a comment. But in terms of theory and, you know, general, like, you know, what to trade, not how to trade, these things look like they make sense to me. If I'm looking at Ethereum, once again, I'm seeing Ethereum at a major resistance right here. We've hit it, and you literally have been up and hit your head on at that resistance and basically have been consolidating at resistance. It's unlikely you just break it without a significant retracement first. Okay, so that's why I'm looking at Ethereum as a high probability trade to retrace down to probably the phi ratio of this move before consolidating in accumulation and then breaking that resistance. So that's the other trade I think is a high probability short trade. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 1st, 2023. And we're almost there. We're almost at the point where everything's bottomed out, everything's ready to rip, but not just yet. And this is why I'm making this video as a crypto weekend outlook. And I'm expecting a red weekend. I'm expecting a pretty sizable drop to the downside, not just for Bitcoin, right? Because Bitcoin's the leading indicator. Bitcoin is the king. Bitcoin basically moves our market. Where Bitcoin goes, other assets follow, generally speaking. So we can anticipate with high degree of probability, and as I've been saying in my previous videos, for Bitcoin to go down to 31K and for alts to follow in a way. And so that's what we're going to talk about, the weekend outlook, guys. If that sounds interesting to you, then watch until the very end. One thing I will say is this. Remember, if you're trading the markets, you can buy spot, in which case you just buy and you wait for it to appreciate in value. Or you can trade leverage, but be very, very careful. It's a skill. It's an acquired skill. And if you're trading leverage, you generally can trade up or down. So you can take advantage of volatility in either way. And if there's a high degree of probability that you anticipate, you, not somebody else, not some guy on the internet, some gal on the internet, but you, if you think with a high degree of probability that price of the asset that you're trading is likely to go in one direction or the other, you can take advantage of that, okay? And you can trade that and still make money. So personally, this is what I'm doing. I'm anticipating a sizable drop to the downside. As I said, I think Bitcoin's going down to 31K region. And so I'm going to try to take advantage of that with some short trades. So I'm going to talk a little bit about that as well. I know I don't talk too much about my trading and how I trade and all that stuff, but you know, why not? I'll say a few things. Okay, so Bitcoin, first and foremost, we're looking at Bitcoin on the 4-hourly time frame. First thing that jumps out at me when looking at this chart is this rising wedge, okay? And a rising wedge, for those of you who look at charts frequently or do technical analysis and understand pattern analysis, these patterns typically break to the downside. No pattern 100% of the time does anything. It's always probabilistic. So I think it's a 2/3 chance, 66 something like that % chance that it breaks one way over another, but I don't really look at that as much. I just use my experience, and I know when I see a rising wedge, it can go both ways, just like any other pattern, but I tend to see it come back down, and the target of this pattern is typically the base of the wedge, okay? So that's the first thing that jumps out at me. The next thing is that for the past 20 days or so, we've been in this channel and basically ping-ponging back and forth between the support and resistance of this channel. I've been saying that with a high degree of probability, I see this as being a distributive channel, meaning a channel where Bitcoin's preparing to break down to the downside. And remember that these distribution channels take their time. These accumulation channels take their time. Whenever you're preparing to go in any direction impulsively, the precursor of that big move is always some sort of consolidation. And if that big move is to the upside, that consolidation is going to be an accumulation channel. If that big move is to the downside, that consolidation is going to be a distribution channel. Those channels always take a while. So for people who are like, well, what is Bitcoin doing? I see a lot of big accounts saying Bitcoin's acting weird, blah, blah, blah. It's not. If you study charts long enough, you'll understand that these accumulation, distribution, any consolidation takes time, and it's corrective in nature, so it is not very predictable. Like, its nature is capricious, its nature is unpredictable. One thing that you can predict with a high degree of probability is just the support and the resistance, right? Because it's range bound, and it can wick up and down below the range, right? But it's still more or less range bound. So once you see that, you basically know with a high degree of probability, you're still working in the confines of that range. So for people, I see some big accounts saying, oh, Bitcoin's made a high, Bitcoin's hit its highest mark since blah, blah, blah. That's a bit silly. It's useless information, because the context of that higher high is basically a 20-day range that you can't break out of, that you're more likely than not, going to break down from. So telling people that, you're pretty much insinuating, and I use that word purposefully, insinuating that this is going to break up when it's more likely than not, statistically speaking, going to break down. Yeah, so this is why you have to do your own research, do your own damn analysis. Be very careful with a lot of these big accounts. A lot of them don't do analysis, like actual technical analysis. They're just looking at the numbers, and if you look at the price, making a higher high, then you may think, oh, that means it's going to continue to the upside. Nothing bullish about this chart. I just dropped down to the hourly time frame. Guys, if you're getting value, please like, share, and subscribe. Again, ping-ponging up and down between the support and the resistance, and even within this channel you can see a rising wedge. That doesn't look good for continuation. Obviously these can sometimes break to the upside, but this, just in my experience and just statistically speaking, looking at the patterns, looking at the price action, that looks like it's trying, and it's failed, and it's finally going to realize that it's not going to make it past this $38,000 range and then come down violently, okay? The other thing I like about my thesis, my trading thesis, yeah, is the idea, if you zoom out, that the time frame, according to Elliott wave theory, is still on target. What do I mean by that? I mean, in Elliott wave theory, when you're looking at an impulse, wave 1 is typically the same time. The wave 1 typically takes around the same time to form as does wave 2. And we're postulating that this impulse that Bitcoin has enjoyed since October of this year has been a wave 1 impulse, okay? And that is basically wave 1, 2, 3, 4, 5, okay? If that's the case, what we want to do, and I've done this before, apologies if you've already heard this, but it stands to repeat, if you measure this, you get about 25 days. 25 days it took to go up. If you now measure the time it's taken rather from that top, right? It's been 22 days. So when I'm saying I think based off of my analysis, based off of everything I'm seeing on the charts, that the weekend's likely to be red, that the weekend's likely to include some sort of large drop or the beginnings of a large drop in Bitcoin, that fits, right? Because we basically have 3 more days to go to find Bitcoin back to support, right? And that support level, as I've been saying for months, is this broken resistance that needs to be retested as support, okay? It is a significant resistance, the top of this range that we were in for, I think it was 250 days. Don't hold me on that, but it's a long time. It's a high time frame range, right? We broke out of right here. And what you need to do technically for that break to be true is retest it, right? You break and retest, right? So it's called a support resistance flip or resistance support flip. Okay, so in this case it's a resistance support flip. You break the resistance, now you retest it as support, and that's what we're looking at with that wave 2 or purported wave 2, and that would take us until Monday, right? So that's about 3 days, and then it would be 25 days up, 25 days down. So I still am leaning towards the side of Bitcoin breaking down in a significant way very soon for those reasons. Guys, if you're getting value, please like, share, and subscribe. And that move from where we're at present would be approximately 20% to the 20% of the way down. Okay, so that's Bitcoin. Those are all the reasons for why I'm thinking the way I'm thinking. Obviously, I don't want to only look at Bitcoin. I also want to look at other factors, other indicators, and I'm using also altcoins as an indicator, right? I can look at individual altcoin charts, or I can look at the total two, which is the aggregate of altcoins in the cryptocurrency market. And what do I see here? I see, let's zoom out so you can see what I'm looking at, because some of you may not know what that is if you're not like looking at the charts every day. Basically, we're at resistance, a 525-day resistance, and we've been consolidating at the top of this resistance. I've said previously in one of my videos that I believe that this is not the end of the wave, that you will eventually break up and out from here, okay? So basically now, if we zoom in, I'm going to explain more of what I mean by that. Right now, as it stands, if you go on the smaller time frame, this doesn't look great for continuation to the upside. It just doesn't. I'm going to be honest. Like, I don't see this right here just breaking up like this. No. Especially given that Bitcoin's likely to do what we think it's going to do. I think you're also going to get a reaction in altcoins quite naturally, right? Bitcoin is the king. Bitcoin is kind of the market leader. So things follow the leader. I still think that this range, more or less, is going to be the range from where we break out from. But I think that altcoins in general, in the aggregate, may need to tap the bottom of this particular range. I could be wrong. It could go much lower. But, right, this is why I said in my previous video that if I'm trading long, okay, and this is my first kind of, the first thing I want to share about my trading strategy. I'm not going to get in any long trades unless and until I see a convincing move from Bitcoin to the downside, and or this chart, this total market cap chart for the altcoins, comes down to some support level and shows strength on that support level. So the first support level, I want to see it show strength on is right here, okay? And that would basically be consistent with our theory that this range is just some sort of complex corrective wave, but it's intra-wave corrective, meaning that what we could expect is a continuation from this range. So this would be a reaccumulation range, not necessarily a distribution range like we see in Bitcoin, okay? And then to corroborate that, and again, this is just a theory. You're not, you're trading theories, but you want to be very, very careful because you could be wrong. But you have to kind of take a stab at it and think maybe this is happening, maybe that's happening, and then wait and see. And then, you wait until something seems convincing enough, and then you try, and either you win or lose, and rinse and repeat. That's basically my process. There's no 100%, right? If anybody tells you that, I don't know, they're probably lying, because then they would be a perfect trader that never, ever, ever takes any losses. The thing that gives me confidence to say that is looking at this Bitcoin dominance chart. Okay, and remember, Bitcoin dominance is a measure of Bitcoin's dominance versus other assets in the cryptocurrency market. When Bitcoin dominance is going up, that means Bitcoin's gaining against other assets. Either Bitcoin's going up more than them or down less than them, right? So when Bitcoin's going down, typically it goes down less than the rest of the cryptocurrency market. So if we see Bitcoin dominance teasing a small move to the upside or a big move to the upside, we can expect a drop. And that's kind of what we're seeing on this chart. I'm on the 4-hourly time frame. You can see we've been consolidating, and we're in this move. And it looks to me like you're at least targeting these levels right here in Bitcoin dominance. So again, my idea of Bitcoin going down is kind of being reflected in this Bitcoin dominance chart. Although it's not that huge of a move to the next resistance, right? So if this does break up and out, once we hit that, that'll also tell me, okay, now alts are looking to gain against Bitcoin again, because now Bitcoin dominance is at resistance. Does that make sense? So I'm kind of looking at that as well. And I am finally also looking at our US dollar currency index, which is a massive indicator for Bitcoin, because they are, Bitcoin and the US dollar currency index, inversely correlated. You can look at a historical sort of comparison between the DXY and Bitcoin over 10 plus years. It's the strongest correlation we have in crypto. I'll continue to say this. I don't care what anybody else says. If I'm wrong, if you have something stronger, show it to me, prove me wrong. But on the high time frames, and sometimes, most of the times, even on the small time frames, when the US dollar currency index is going up, Bitcoin's going down. When the US dollar currency index is going down, Bitcoin is going up. And so what do we see here? I've said this before. You have some sort of impulse, some sort of three-wave correction at the phi ratio. Take your Fibonacci retracement tool. You'll see you're at the 0.618 of this increase. So basically, you're on local support. I do expect a move from here, okay, in the US dollar currency index. I'm not exactly sure how far it goes. All I'm saying is that if you go on the daily time frame, my stochastic RSI momentum indicator is telling me the same thing, that we're on some level of support, and you should expect some level of bounce from the US dollar currency index, and that would result in Bitcoin going down. So all my indicators are telling me Bitcoin's going down. Bitcoin dominance, US dollar currency index, also altcoins. Question is that I have is, if I'm going to take advantage of this trade, these trades, how far am I going to go? Like, how far down are altcoins going to go, right? And where do I take profit? And then my other question is, when will some altcoins now then find support and then start going up? So if I'm looking at some of my trades, here are some of my trade plans as promised. So I like to kind of identify some assets that have moved If I'm going to short, I'm not going to short something that looks like it's on support. I'm going to short something that looks like it's at resistance, or something that looks like it's made gains, right, in the recent past. Like something like R-Weave, like here, I see you had a top, you came down, that looks like an initial break of structure to me. This looks like a B wave to me. Basically, I'm looking at some sort of retracement all the way back down to the phi ratio. Actually, you know what? Let's go on the, I'm showing you the chart that I use that corresponds to the exchange that I trade on. That's important, by the way. That's another quick tip. You always want to do that because it makes you more precise, because not all pricing is the same on every exchange. Sometimes the discrepancy is quite large, so you always want to make sure you do that. But yeah, you can see on R-Weave, this chart, that we're at resistance, a major resistance, right, that we've been at since, this is like a, what, more than a year's worth of resistance. As you can see, this falling wedge is like a 586-day resistance, and we're at the top of it. So kind of like what the aggregate altcoin chart is showing us, maybe we get a move down a little bit here before breaking this, right? Because we've done so much work to even reach the tops of this. Do we just consolidate and go up? I don't think so. This tells me, in my estimation, on this chart, that we should at least retest the very ever so important midline of the channel. Remember, channel trading, quite simple. There's three major aspects to channels. There's a bottom support, top resistance, and a midline. Each and every one of those aspects are important. You cannot break, or you cannot leave the channel without respecting either of those. So right now, obviously, we've based on the support level that has been touched and that has been tested multiple times. The resistance, right, that has been tested multiple times. Now the support, or the midline, should now be retested. So for me, this R-Weave trade is kind of a straightforward trade insofar as, one, we're at resistance, two, the midline should likely be retested. So I'm trading this short right here. Okay, so that's one example. Another example, let's see, Bitcoin itself. I think that's quite straightforward, right? We look at that so much. Bitcoin is obviously, like I said, targeting with a high degree of probability this level here, because we broke this resistance and never retested it at 31K. So that's basically, I've already gone over that trade plan, but trading Bitcoin short down to the 31K level, I think, is a likely and, high probability short trade. And that's like a 20% gain. Okay, next one, Ethereum. And again, it's one thing to have a trade plan, it's another thing to execute. Trading's challenging because you can know all this theory and still not know dick about execution. Execution's like a whole nother thing. Sometimes even bad theory and good execution makes you a good trader. But good theory and bad execution, you still can't win. So I'm not going to get into the details of execution. That's just another video entirely. If you're interested in that, leave me a comment. But in terms of theory and general, like what to trade, not how to trade, these things look like they make sense to me. If I'm looking at Ethereum, once again, I'm seeing Ethereum at a major resistance right here. We've hit it, and you literally have been up and hit your head at that resistance, and basically have been consolidating at resistance. It's unlikely you just break it without a significant retracement first. Okay, so that's why I'm looking at Ethereum as a high probability trade to retrace down to probably the phi ratio of this move before consolidating, in accumulation and then breaking that resistance. So that's the other trade I think is a high probability short trade. And if you want the figures, the numbers, take your appropriate chart for whatever exchange you're trading on. Take your Fibonacci retracement tool, and then just target the golden pocket, right? Typically, these wave 2, these retracements, even if it's a zigzag, they target the golden pocket. The zigzag has to hit at least the 0.5 Fibonacci retracement level. So I would expect this to come down to at least here, more likely to down here around 1745. Okay, that's the other one. I think you guys get the point. I mean, it's pretty much the same trade on different assets that I've observed as being overextended. Okay, let's do one last one. Chainlink. Okay, and Chainlink has been up for 50 plus days, and that's another one. It's kind of like maybe you missed the pump, okay, and you haven't been in Chainlink for the past 50 some odd days, but here's your opportunity to take advantage of that move, because now you're going to get that move in the reverse, the retracement, because nothing goes in a straight line. So I think this is a really high probability trade. Look at this. So you form this consolidation distribution pattern right here, this M top, and the bottom of this M top was support, now resistance, right? Previous support flipped into resistance. So that is your resistance that you hit your head on right here, okay? Also, you have this almost 600-day channel that you were consolidating in, right? This is a perfect example of an accumulation channel, right? A channel that breaks to the upside after a drawdown. You gather yourself, you basically gather the assets, gather the buyers once again for the asset to mark up, and that markup happened. But what about this level? Again, same idea. You cannot break major resistance without retesting it as support. And here, incontrovertibly, this level is untested. It's so clear. This is like as textbook as it gets. Untested level. Price will almost invariably, with a high degree of probability, come back to this 500-day resistance to flip it into support. So what I would do, and what I've done, is take my Fibonacci retracement tool, measure the length of this impulse, and target the phi ratio. And what do you know? The phi ratio is almost exactly back to this line of, or this level of resistance, and a retracement of this move down to the phi ratio would retest it as support. So I think that's a kind of high probability trades. You want to take high probability trades. Trading's hard enough. Don't just choose any old asset, because all assets move differently. This is why I've chosen those for my short trades. Guys, I hope this was helpful. I hope this was useful. Like, share, and subscribe if you've gotten value. I hope you have a great weekend, and I will see you next time. Take care. Bye.